Hello investors and welcome back to this new video. Today we are looking at a lot of tickers, big tickers, Apple, Microsoft, Google, Meta, Nvidia and Tesla. We want to actually see what the technical analysis is positioning us. Where can we enter the market if we have to? Now, looking at Apple. Apple is actually very tricky because recently it was forming this triangle here, even though it doesn't actually respect the triangle philosophy, but it's still inside the triangle. So what we expect is this: the price has to break either one of this level before continuation. Now we are on the uptrend, so this triangle is actually maybe a consolidation before a big push, because Apple is actually that company that is building a lot of chips. Recently they decided to build also data centers. They also decided to include themselves in the race of AI. So based on that, based on expectation, the price might continue to react to this 200 to 100 moving average on the daily time frame, or maybe come down to this level because we have a major liquidity pool here. So if the price collect all this liquidity, it might come to this level right here. It might come to this level right here and rebound. So all it depends on how the price reacts coming out of this triangle. If it's down here with a candle close and big volume, we expect the price to collect this liquidity before rebounding. But if the price breaks this level and continuation by breaking this level with a big volume, it will just rebound on it and continue. That's actually what Apple is telling us. Now, investor, where are you right now? Are you already inside the market, or you want to get in? If you want to get in, I suggest that you should be patient. Wait for the decision here. Wait for the decision here. When we look at the history of Apple, we see one thing. On a weekly time frame, the price like to touch the 200 moving average or nag it before accelerating. Here. So in the future, the price might come back to that level and try to create some kind of consolidation before bouncing back. So buying to this level is okay, but we have to take an account that the price might come down because we have a big liquidity pool laying here. The price might come back to this major level because this level is actually the one that creates the break of structure of the previous all-time high. So the price might come back to this level, hit it before continuation. But for this, we need to have a big catalyst in the market. Right now with the AI boom, I don't actually see this scenario to happen because the price might just continue to rise. Now, what about Tesla? Tesla is actually struggling because today we have news, tomorrow we don't have news, today we have good expectation, the next day we have fear. Okay, based on chart analysis, when you look at the weekly time frame, we have a major level here that is actually calling the price to come in. If the price respects what is called price action, it has to come down to this level and collect the certain liquidity before continuation. Coming down to this level, collect this liquidity. Because remember, this actually respected this fair value gap. So many investors jump in at this level. As you can see here, we have three big candles. So when you see this, you expect the price to continue to go higher. But the price got rejected on the previous all-time high. The candle wasn't close or almost. It means something. After this rejection based on expectation, the price went down sharply and is now targeting all the stop loss that were here. Maybe we need actually, like I said, a big catalyst to trigger the price, because the 200 moving average has to narrow around here before creating what I call historical movement repetition. Why? Because when you look at Tesla based on history, it's actually very dancing. You don't actually know if you have to put high high or high lows. It's actually very narrow. You might say it's a butterfly movement because one day the price is well respected. High highs, high lows, high highs, high lows, high highs, high lows. The other time, you have just these high lows, and then suddenly you don't actually know where to trade. That's why I'm saying this. When it comes to trading, there's a difference. But when it comes to investing, you just buy and hold. Of course, it's risky. You cannot just win every time. But you also can manage your portfolio, your stop loss, and prevent yourself to get broke. Yeah, so we have this major level here, like I said, this major here, but we have a best position here. I'm telling you guys, if the price come back to this level, this will be a big opportunity, because Tesla, even though right now is struggling, Tesla still has a big construction to the space, data centers, AI boom. We expect revenue growth, And also, all these things can create expectation in the market to move it. But right now, it's difficult to actually buy here because we don't have any support. And if the price come back to this level and react with a big candle or doji, we might say that we can put our stop loss right here, down here. Now, what about Nvidia? Recently, Nvidia announced a 681 billion revenue. People will call it a trap, but what you can see actually in the chart is this. The market move based on expectation. The market have been consolidating around a major level here, as you can see, around 172 to 196. Okay, recently because of the 600 billions in revenue, the expectation creates some kind of push and broke this level. But as you can see here, the level wasn't broken the way we want. We want the level to be broken with a candle close. But right here, we just have a tick. It means one thing. The price got rejected while trying to push this level. Now, we can actually say that the price got rejected because of two things. First, expectation. Because market move based on expectation. Investors might think, okay, since Tesla has 73% revenue and it's the best ever in history, what will happen if next year the revenue is maybe 15% or 40%? This creates fear, and when fear appears in the market, it creates bad expectation. That's what created this big candle here. Just a small fear can crash something, just like that. But the chart are telling us another thing. Because remember, the market doesn't move based on news, no. I predicted the price will come back to this level and react. But the reaction is not what I expected. I wanted a big reaction. For example, here, like this one. Even though we have a big volume, a big candle, the price still came to this gap and came back. So it means that the consolidation will still continue. But the best place to buy Nvidia is actually here. We are actually in the best position ever because the price based on history has to touch the 200 moving average before big reaction based on history. Now, we are already touching the 200 moving average. We created a double top here. This double top is telling us that the price might just continue to go higher. Now, the reason I'm saying this is this. Even though the price is consolidating here, it has to do something very simple first, the collection of liquidity. It did it here because we expected the price to collect and continue. Liquidity collection, continuation. But it collect and reverse. It means that the market is not actually telling the truth. Because even though the 681 billion were already priced in, they also have capex because Nvidia still want to be the leader in terms of chips, in terms of AI, in terms of everything. That's why we can actually say that the price will continue to consolidate here because we still have a magic liquidity pool here. Look this level. Even though this double top is very interesting. Why? Because when you look at the weekly time frame, guys, this level is not actually the best level to enter because the price broke this level recently here. It means that the price might come back to this major level here and continue. And this level respect what? Based on history, the 100 moving average. This is the most likely scenario because this consolidation has to collect some kind of liquidity before its expansion. So based on history, as you can see here, we have this. We also have this. The price doesn't like to disrespect the 100 moving average. Now, let's talk about Meta. Same situation. We wanted Meta recently to do something to make us actually rich because this level here was a big order block that created this push that broke the previous all-time high. The price came back to this level, is actually consolidating. We had hope recently because the price respected this double top here, big push, candle close while breaking, candle close. So it means the price is no longer interested in going down because breaking this level on the weekly with candle close means one thing. The price is not interested in going down here. So what is this? We don't actually understand. But based on price movement, this is actually a good level here because dancing inside this level means one thing. The price will dance here, create some kind of liquidity on the daily. If you check on the daily, as you can see, dance here, create this kind of liquidity on the daily, here, and collect it before a big push. So this might be the best plausible scenario. I want to say this here. The price doesn't move based on news. It moves based on expectation, based on fear, and based on greed. So people might actually trade based on news, but it's actually very risky to do like that, to invest based on news. Now, Google. Recently, Google was actually the most beautiful stocks to invest in. But after reaching a certain level, all-time high, I'm talking about $350, it ran away with our money. What we expect the price to do is this, because when you look at the weekly time frame, this level was very important because it was respecting, how do you call it? It was respecting a certain level because the price broke this level and continue. This is just based on my view, but what is the price movement has to say? When you look at the chart, like I said, the price is moving beautifully, very beautiful uptrend. But recently people started to think maybe Google is already overpriced. Especially when they decided to use again almost 180 billions on capex. Investors were terrified, and banks were actually in the middle. Okay, where to put who to give the money or who to hold the money for? So it was actually very intriguing at this moment. That's why the price dropped sharply because of the expectation, guys. Right now, I can't say much because the capex is still there. It's still there, and AI is still continuing to hold the market. So we have the AI boom, which is still continuing. Even recently, we thought that the crash will just pop out, but it's still holding. This is institutional decisions. Now around this 200 moving average. This moving average means that the price is actually trying to tell a story here. So we have to be patient. On the daily time frame, look, the price is actually trying to break the 100 moving average with candle close. If this continue and we have a big volume in the market, if this continue and we continue to have this push down here, we might look at a major level here to see where the price is actually bringing us. And the best moving level that we can see here is this one, because it created a big fair value gap that broke this level. This one even fair value gap that broke this level, continuation, and it respects exactly the same drop that has been on the Google movements. Look at the distance. So based on this, guys, I want to ask from you, which stocks are you actually buying? Which stocks are you actually buying? Because when we see Alibaba is actually struggling. I won't talk about Alibaba today, maybe next time. So let me know, guys, what do you think about this? If you have any stocks that you want us to talk about, where exactly you want to buy, because this is important. If you want to invest now or later, let me know in the comments. I will gladly tell you what I think. Investing is risky, and I hope guys are doing your own research. This was my personal view. Trade safe. Thank you for watching and have a nice day.